Hi, Mike Coe here with another Open Interest Web Extra. U.S. equities rallied sharply today as Jerome Powell said the U.S. economy is expanding enough to withstand rate hikes while saying that the central bank will, quote, proceed carefully, unquote. Global commodities surged to multi-year highs as traders step away from Russia, sparking anxieties of shortages from agricultural commodities like wheat to energy like natural gas and oil. There was unsurprisingly many names seeing well above average options volume. I'm just going to highlight a few of those and take a couple viewer questions today. Since we're on the topic of commodities, let's start with uranium. The ETF URA traded greater than 4 times the average daily call volume. The most active contract was the April 28 calls. Over 14,000 of those traded, including a purchase of 10,000. The buyer paid 80 cents, which suggests that trader believes URA could recover to levels not seen since last November. Another very big trade was seen in the high-yield bond ETF HYG, which traded over 500,000 put contracts, including a 53,000 lot purchase of the July 72.65 put spread. High-yield bonds could be pressured by rising rates, widening spreads, or a combination of these, but the strike selected here suggests that they're more of a disaster protection play, since a move of this magnitude would not be explained by any forecast move in rates or spreads. The China ASHR ETF saw a very large call spread trade. China stocks have underperformed the S&P significantly since mid-2021, but a buyer of 24,000 of the April 37.42 call spreads may be betting that this underperformance could reverse and China stocks could rebound. ST Microelectronics, which is down 20% from the November highs, saw a purchase of 17,000 of the July 55 calls, which are actually above those November highs and more than 25% out of the money from where the stock closed today. The company whose largest customer is Apple, which accounts for more than 20% of their revenues, next reports earnings on April 29th. Target reported earnings that exceeded analyst expectations, and the stock rallied sharply. It's up 12.5% in just the last 2 trading days. The company's full-year revenues exceeded $100 billion for the first time, and the company announced an ambitious plan to expand their logistics capabilities and increase their capital expenditures by more than 40%. At least one trader did express some reticence with a purchase of 10,000 of the May 150 puts. Those are well out of the money, kind of hard to explain, could be, again, a little bit of a disaster protection. So why don't we take a look now at a couple customer or viewer, I should say, questions that we received. No one's paying me any money for this, so I don't know that I should describe you guys as customers, but happy to help. Okay, Edmund Dantes, Count of Monte Cristo, asking, superb, Mike, I'm also enjoying your book. Thank you for that. Can you explain how you determine whether a trade is opening versus closing, as well as whether puts or calls are being purchased or sold when viewed in the Thinkorswim options, time, and sales? Thanks. Okay, so this is probably a topic that deserves probably an entire video of its own. Couple quick things, though, that you can try to take a look at. First of all, if the volume exceeds the open interest of the option in question, then obviously some of that volume has got to be opening. There are other ways you can tell, though. If you can determine that the flow is in the same direction as flow that has preceded it, you can get indications of whether it is essentially continued opening activity that's been going on over some time. So, for example, if you've seen a number of days of call buying activity in a specific option, and then you see a lot of volume today, and that is also buying activity, then that could very likely be additional opening activity, which brings us to the other part of your question, which is how can you tell whether it's being bought or sold? A couple of ways to check. If you are looking at time and sales and you can see both the bid and the ask, and you can see the bid and ask before the trade takes place and immediately afterwards. Let's just say that the market is 3 bid at 320, you see 1,000 trade 320, and then the new market becomes 310 at 330. That's a good indication that those were bought. Why? Because the trade took place on the ask before the trade took place. Now, there can be little wrinkles to this because sometimes you'll see someone put a bid out in the market and they will continuously raise that bid until somebody comes in and sells. So it will look like it traded on the bid, but the way you can tell that is by watching the implied volatility. If the implied volatility on the bid keeps rising and then eventually they trade, that's usually an indication that they were bought as well. Now, we'll probably need to go through some of these examples, like I say, in a more in-depth video to clarify that. But that is sort of the way you can kind of get an initial indication. By the way, I also happen to subscribe to exchange data. Sometimes, whether it's opening or closing, is provided to me in the institutional exchange data that I get. But there are ways for retail market participants to look at that too. So why don't we take a look at another question that we have here. David asks, thanks, Mike. I look forward to these every day. Makes me feel validated when we find the same things like Zynga. I need an episode before the market opens to keep from going on tilt like this morning. Well, we definitely would like to provide more content more regularly and at times that are more actionable. First of all, with respect to unusual volume, which I often talk about in these segments, can't do that before the market opens because nothing is traded yet. So that will always have to be during or after the close. But we are hoping to get some videos out there maybe before the open from time to time. And whether we do or not is going to be a function of whether we get some support for these videos. So if we see a lot of likes and encouragement to do this and get a little bit of an audience and a following, hopefully we'll be able to produce more content. I hope that helps. Thank you all very much for watching. It's very much appreciated. If you like this kind of content, hit that subscribe button, hit the notification bell so you'll be notified when we create new videos. And I look forward to seeing you tomorrow. If you liked the content, please consider subscribing to the Open Interest YouTube channel. That's youtube.com/open interest. And of course, you can also follow or tweet me at Michael_Co, or go to our website, www.openinterest.pro. Thanks for watching.